All right, we're live, guys. S&P 500 had a pretty rough day today. You had the S&P 500 down 1.2%, you had the Nasdaq down 1.1%, and you had the Russell 2000 down 1.3%. So a pretty rough day across the board. There wasn't like a imbalance between strength in the large caps versus small caps. They were all selling off pretty hard. And that came as a surprise too, because yesterday you had a pretty good bounce in the market, setting up for some follow through today. The candles were good. The technical analysis was good. And you didn't get that. Now you have a lot of reacceleration of inflation across a lot of different countries right now, from Japan to Canada. And so it's increasing the odds that there's going to have to be more aggressive rate hikes in the future with the Federal Reserve when in their upcoming meetings. We got one in September and we have one in November and then another one in December. So those next three meetings are going to be very interesting to see what they do to close out the year. So what I want to do in this live stream with you guys, first off, make sure that you're posting the charts that you want me to go over and the questions or and that you want me to answer down into the comments in the chat comment section. So make sure to be doing that. I see new ways already popping in. And we're going to go over the Qs. We're going to go over SPY. We're going to go over the Russell 2000. Also going to go over the Home Depot chart. They just reported earnings and see what kind of opportunities that might exist there. And then I'll go ahead and cover your questions as well. So let's get right to it here. First off, let's look at SPY. SPY had a pretty strong sell-off today. That's probably an understatement to say the least. But there's definitely some areas that we want to look at here. So this rising trend line right here, going back to the March lows. So this March lows, this was established when you had the big regional banking crisis. When everything started falling to crap, you had the lows that were established in March. Then the Fed came in and bailed out the regional banks. So what happened next? We took off. And then finally, we're getting a retest of this rising trend line. Now, before, it's kind of interesting. One of the things you got to remember about technical analysis is that as you get more data points and price action, and as more and more trading sessions come to a close, you have to reconsider all the previous lines that you did or that you're working off of. So for instance, before, I was looking at this particular chart as that being the rising trend line. And I was considering the fact that, yes, we do have a candle that's broken below the rising trend line, but it was more of an outlier. There was a lot of data points that was suggesting this was a strong rising trend line. But then when we started holding on to this 50-day moving average here, this red line, holding on to that over the next 2 days, I had to reconsider what I was looking at there. So I did redraw the trend line to where we're essentially sitting right on this rising trend line. Now, what do I think of this sell-off so far? We're about going on 3 weeks into this. The last 2 weeks, the Nasdaq, the S&P 500, both have been down each week. But what you haven't seen is actual panic come into the market. Real serious concern that among traders, suggesting that this is more of like a 2022 or a 2018 Q4 sell-off or a March of 2020 sell-off. We haven't gotten anything that looks like this. So far, I would even say that the selling has been very, very methodical and stair-stepping. So the old cliche is that the market takes the stairs up and the elevator down. We've been more like the elevator up, the stairs down. Very orderly sell-off. The volume hasn't been spiking. I mean, if you look at some of the volume that we were seeing back in March when there was sheer panic in the market over the regional banks, right here that is some serious volume right there. We're not seeing any of that right now. It's very dull. Today's sell-off, pretty much average. You had the S&P 500 down 1.2%, but you didn't really get a push above average volume. Now, maybe with some of the after hours trading, it'll push it a little bit higher than that. But yesterday's rally, very low volume. So there's not a lot of energy in the market right now. And if you look at the last 5 days, it's down, up, and down. That means every day we're reversing these moves. And if you look at the yesterday's candle on SPY, we broke back above the 5-day moving average. And this is what you call one of those Marubozu candles. And I'd never say that word right, so forgive me if I said it wrong. It's just not my forte. But this Marubozu candle, and I think I said it differently than what I just said it, actually was really strong. We closed at the highs of the day. And if you don't know what that candle is, it's a very bullish candle when essentially you have very little in the way of shadows on the candle. Shadows are these lines that are coming out on each end. Those represent the highs and the lows. With this candle here, we closed at the highs of the day. So there was no upper shadow on this candle body. And so it's set up really well for a strong bounce in the coming days, or even to the next day. But instead, we got a gap lower, and then we retest this rising trend line. So tomorrow, the task is going to be, are we going to hold this rising trend line and bounce? Then let's look at the Qs. On the Qs, actually, let me finish a little bit more on the SPY. Also, what I want you to look at here is this support level. If we do break through this rising trend line, the 14 area, that would be a significant sell-off. There is also other trend lines to keep in mind too. This rising trend line that's a little bit higher than that price level support, that green line that I just mentioned. This trend line comes in a little bit higher, and it's going to continue to get higher as this one continuously gets a little bit lower because it's at a slight tilt. But this one's at 420. I think there's a very good chance that we see a pullback before the end of the year that takes us back down to this rising trend line. And if that's the case, that could also offer a good bouncing opportunity. So the levels are there. If the bulls need to hold the rising trend line here, this purple line going into tomorrow. If that doesn't hold, then you're starting to look at potential possibilities of pullbacks to this yellow line. This is the rising trend line off of the October lows of last year. And then you also have price level support that goes back to February of this year. That could also be another area to hold. Now, to the upside, what do we need to see? First, like I said, we need to hold that rising trend line. Then we need to also see a break of what is essentially a little mini downward channel. Some people would say, hey, you got a bull flag there. Possible. I mean, a little bit steeper than I would prefer a bull flag to be, but nonetheless, it is an orderly pullback. It's done on somewhat light volume, and it could offer a good opportunity to get long if it breaks back above 448. Or if you want to play it off of the rising trend line, just be mindful that there is this declining channel in the short term that it's trading inside of. So I see your questions there, Alan. I'm going to get to that PayPal for you, and glad to have you in here. Now, the Qs. Showing you what I got here. So a lot of similar features there. We got this triple bottom here that was playing out. Some might say that's like a double bottom. If you just count all of that together, either way, it's fine. It's pretty much the same thing. You got a long-term trend line that is in play here. And then let me get my little lines here going. I'll move that one back. Then you have this rising trend line. And this one's actually broken. So unlike SPY, this rising trend line has definitively broken this purple line here. So that's not good. You also have the price level support as well. You're also well off of getting the all-time highs broken here. So that's really not even in play. So we don't even have to worry about that at this point in time. You also have some price level resistance, this white line here, and then this red line. Now, what I'm going to do is I'm going to go over all of them and tell you exactly what to look for. There's some resistance above, some support down below. We broke this purple line here. That's not a good thing for the market. That shows you that weakness is starting to accelerate some. You also had this gap fill today, and by gap, I mean this little area here on the charts. I'll just highlight it for you there real quick. You can see that thing got filled probably about 4 or 5 days ago, actually. But nonetheless, that's been filled. We can take that one off the charts. The one, I think there was one on SPY too that got filled. Yeah, that's the one. I was getting it actually confused there, the gaps. But yeah, this one I forgot to mention, that got filled today. So keep that in mind as we're trying to bounce off of that rising trend line. The one on the Qs have already been filled. So then you have this blue rising trend line here. This goes all the way up to 355 currently. Could see a pullback to this 352, 355 area, depending on how long it takes to get there. That would be another good area to try to play the bounce off of. If that can't hold, then you're really looking at a pullback to this major support level that goes all the way back to February of this year. Or actually, it goes back further than that. It goes back to September of this year. September of this year has held pretty well. That would be a pullback to the 319, 320. That would mean that you're seeing some wholesale selling, even more so than what we've seen before, and a lot of your FANG stocks, maybe even 10% to the downside, which would be significant. That's going to put a big hit on the market if you see a lot of that, the big tech plays start to sell off. So this is probably in the 6 month range, probably a worst case scenario. And looking at IWM, we got this rising trend line here. Hasn't broken it yet. You're essentially just sitting like right on that rising trend line. And you got this data point here where it's bounced, and this data point here, and then it's just sitting on it, slightly below it, I guess you could say, but not a definitive break by any means. And then you got the support level here. So IWM, there's not a lot to go over here, but where I could honestly see IWM going down to is back into the 180s. That wouldn't be a very good thing for it either. And then you got the VIX. 7 out of the last 8 days, you had a lot of aggressive selling. Every time that the VIX popped higher, it immediately got sold off. Now, sometimes you'll get these one-day events like what we saw today and back on August 4th. What we're looking at for tomorrow is, does this same thing happen where you just get completely demolished all the gains from today like we have seen so many times in the past? That's been the trend of late. And the technical analysis on it has it approaching some serious resistance where you could see the potential for a move up to like 1690, 17 tomorrow, and then you get it completely trounced. You also have rising support underneath, but it's nowhere close to touching that at this point in time. Let's talk about Home Depot here. They reported earnings. Not so much interested in what the earnings numbers was. More interested now that we got a full trading session behind us. What is the price action going forward? What do we need to be mindful of when it comes to Home Depot? And here's what we need to check out when it comes to Home Depot. Let's pull up this chart here. First off, you got this nice base breakout, double bottom pattern here. First bottom, let's just go ahead and draw it. First bottom. And then you got the second bottom right here. You got the breakout. It came back, retested the breakout level, not perfectly, but it did hold for the most part, and then it broke higher. Today you have the earnings. Essentially, yes, it's up 0.7%. Good day for it, especially considering the tape, but it's really a doji, indecisive candle. Not really sure where it wants to go going forward, but it did hold some technical support levels underneath, namely the 20-day moving average, which it's done a good job of recent months and weeks. So going forward, what are we looking for here? We have this major support level underneath. So that means any significant selling to the downside, watch this like 280, 281 level. And then you got resistance overhead. This is what kind of makes it a little bit more difficult. It's going to be a hard call to determine exactly where this resistance level is, but it could start anywhere from about 334 up to about 347. So it's a broad range, but kind of right there in the middle. This is where I'm watching the closest here is this 340 mark. Does it push through that 340 mark? And if it does, it sets up for a much bigger upside move. It needs to get through that resistance. Then it starts to challenge perhaps the all-time highs eventually over the course of the next 6 to 12 months, perhaps. That goes back to the late 2021 price action where it was in the lower 400s. So Home Depot, it's not a bad chart, but it needs to break out of this resistance here. Short-term pullbacks here, you could see a pullback down to this 305 level if market weakness continues. A significant breakdown, then you got this huge purple support level underneath. That's what you really want to be watching there. Let's look at your charts here. We got some of you guys posting here. Let's see. New Way. Appreciate you being in here. Let me go ahead and push my head up a little bit above you there. Amazing work as always. Any thoughts on Qs and what a pullback still? Yeah, the pullback's really slow. It's really steady. You're not seeing a lot of volume. I can't get overly panicky about it when the market's not getting panicky. And when I say panic, I'm not going to necessarily get panicked, but I'm not necessarily looking at panic being involved in the market. I was short last week. I was at short QQQ using the PSQ 1-to-1 inverse ETF. I made like 1.3% on it. I did not make much on it. I probably could have made some more if I would have held, but yesterday I was glad that I was not in it with that massive rally. And if I would have experienced that rally yesterday, especially with that candle that we got, that would have probably been enough for me to go ahead and just sell it flat. Instead, I closed it out on Friday. I was happy about that. Now I'm wondering, okay, we got this next leg lower. The only thing is that the Qs is sitting at very oversold levels. So I think we are due for a bounce. You got SPY sitting on a rising trend line. I think there's a good chance that we see a bounce. I'm just not sure when we're going to get it. Let's look at PayPal for a swing. All right, bear with me here. There we go. All right. Sometimes it takes me a little bit of time to get these things. I've marked this chart up to pieces. I was actually just long it right before their earnings and everything else. I think I made like 4% off of the final third. First half was like 2.5% loss. It was a messy trade, but it turned out to be ultimately, respectably profitable. It might have been like 3% on the overall trade that I made, but you have this huge gap down on the trade or on the chart. Gap down, back below all the moving averages. The biggest thing that people get themselves into trouble with, and this is a perfect chart for that. Let's just get rid of all the lines here. People will see this kind of candle right here. This is from their earnings report. And they'll say, oh man, it's down, 20+% or whatever it was. I need to go ahead and buy that. So what they do is they buy it. But this is a falling knife scenario. And why I say falling knives, if somebody drops a falling knife, for instance, off of a 2-story building, and you're, at the 1-story level and you're seeing it come by and you try to grab it as it's falling, there's a good chance you're going to cut yourself up pretty good. And so it's the same thing with the stocks. If you try to catch a falling knife, there's a good chance you're going to slice yourself up by getting on the business end of the knife. And so you don't want that. So you got to let it settle in some. You got to let it bounce. Usually it takes like three days at least before you should even consider it. In this particular case, on the third day, you got a decent bounce, but there was no way to know whether or not it was finally starting to base at all. The previous day before, it was a nasty day again. So you got to let it settle in some. It was starting to show some possibility, but not quite there yet yesterday. And then you got this nasty sell-off today. So down 6%. It's back in the falling knife mode. I don't know how low it's going to go, but we're now challenging the lows from May. You got to let it run its course. That's really the only thing. I mean, it's got a big gap here, but it also, could be, a couple months before it ever fills it. I mean, look what it did back on its previous earnings back in May. It had a significant gap lower, and it wasn't until really late July that it actually filled it. So you could be talking months away before it ever got back up there if you had a sizable rally for it. Let's look at BLK. BLK, let's see. You got this rising trend line here. I was watching this one pretty closely about a week ago, last week, I guess you could say. This rising trend line, the first yellow line, let's just give it a different color. Purple. This rising trend line held up pretty good until it came back down for a third time to retest it, and then it just completely fell apart, gap below it, and now we're testing. Actually, I don't even know if we're testing this trend line. I don't know if I drew that too good. There we go. So drawing that trend line, we're breaking below that one too. So now that was a significant move lower, 3% to the downside. There's really no reason for me to want to hold this stock if I was in it, because there's no technicals suggesting that it's ready for a near-term bounce. So the next level of support is going to be around 652, unless it carves out a new data point for us. LVMH. Holy cow, what do we got here? I don't know if I'm even typing that one right. Okay, I'm going to skip that one because I'm not pulling that one up on mine at all. I got LVMHF, so not too hot there. All right, we'd love to see an update on your thoughts on Riot, Mara, and LTC. All right, LTC, I'm assuming is Litecoin, so we can do that. RIOT. Here's what I had before this base breakout. We'll give that one like a little purplish color there just so we can distinguish it. Then you had this. Let's go ahead and move that one for a second. Then you had this descending triangle breakout to the upside. Really impressive. Got a lot of people excited. Now you're looking at, it's in a free fall right now. Where does that support start to kick in at? Probably around this 1241 level here. This goodness gracious, I'm muddying up these charts here. This white line here that I just drew, that's going to be your key support level. to watch going into tomorrow and the following days. Can it bounce off of that level? There's a little bit of short-term support right there. Then when you look at, let's see, what's the next one? Mara. Let's see here. Some resistance. I broke above the resistance, came back down. This rising trend line is probably the best place to watch on it. I don't see a lot of good support here. Short-term support here, perhaps, but that's going to fall in line right with this rising trend line there. Oh, boy. All right, we got you guys popping in. That's great. Where am I out? Let's see, where else? Comment on the Michael Burry short. I think those were like filed back in June, so he's actually down pretty heavily on his shorts already. I mean, today definitely helped out, but actually he probably went green today. We're pretty close to it. So they were filed back in June 30th, I believe, if I'm not mistaken. So he got squeezed a little bit in July. Now you're getting back down to where the markets erased the gains from July. Now we're starting to eat into the gains from June. He's been wrong before. He's been right before. I mean, I think he's managing like $1.6 billion. So I'm not one to criticize the guy. He takes a lot more risk than I would ever take in terms of just, really laying it on the line. Difference between him and I is I'm much more like incremental gains, minor losses, contained losses, consistency over time. He's looking to make big moves, big splashes. I think those are a lot harder to nail, just like I think it was back in March or April of this year when he was saying I was wrong or sorry I was wrong. And then you didn't really hear much about him. He's a little bit on the crazy side. I mean, crazy good at times too when he takes some of these big bets, but yeah, totally different trading methodologies there. I think ultimately he probably will be right, but it's a matter of how much pain can he endure before he's eventually proven right in the process. Good question, though. Let's see here. What else? So that was a question about Michael Burry. How about a whiskey review? Guys, I had a pretty good whiskey the other day. I got it at I got it at Costco. They had a whole shipment of these French oaked 46, Maker's Mark 46, and pretty good cask strength. Not bad at all. Also found at Total Wine, I found some Old Forester single barrel. Highest proof that I have in my collection now is this bottle. It was like 65.3%. It was crazy. Haven't opened it yet. Got to finish the other one that I have still, but good find though. I was excited about that one. Julio with a good question here. He says, Ryan, how much weight do you give to breadth indicators, new highs, new lows, advancers, decliners when analyzing the market? What I'm looking for more so than anything is divergence and strength of move. So today, when the market opened up, I was like, man, we got like 6-1 to the downside. That's going to be a tough one to come back from. Now, a lot of times when you get really bad breadth readings at the open, they tend to start shrinking pretty quickly to where it's like, all right, it's negative 6-1 in favor of the decliners. Then you start to see 5-1, 4-1, 3-1, and then you like maybe settle around 2-1, even if the market continues to sell off. What I started seeing though was the breadth was only getting worse to the downside. It was going from like 5-1 to 6-1. I think at the end of the day, we closed at around 6-1. So it never improved. And throughout the course of the day, especially after the first hour, you were noticing a lot of that. Also, there's times where you get a huge sell-off, but you have a positive breadth. That's a divergence there that's worth keeping an eye on. That means that there's only a handful of names that are really driving the market lower. But yeah, so new highs, new lows. I don't really pay too much attention to those. Every once in a while, when you start getting a extreme reading, I'll pay some attention to it. I also like to watch the trend of the ticks throughout the day. I think those are important. Knowing what the volatility index, the 10-year yield, those are also important factors to be considering. Jose joining us from Facebook. Check it out. Let's see, 5743. Also, by the way, do me a favor, guys, while you're listening, like and subscribe, because that really does help me quite a bit. Like the videos, subscribe to the channel. Really appreciate it when you guys do that. All right, so This is a REIT. I think REITs can be really, really difficult to trade at times. They're not the easiest sector to trade, real estate, that is. If you're trying to short it, then you're getting into like dividends and sometimes some big dividends that you might be responsible for covering. But right now, breaking that key support level at around $59 down to the downside, you're back into a falling knife mode. There's not a lot of support until you get back down to these lows that were established back in October. So right now, that does not look like a very good chart. Yeah, you're talking about 55-ish for it test those recent lows. Overall, if you look at it from a long-term perspective, really not good either. I mean, eesh. Yeah, I mean, you got almost like a head and shoulders pattern there going. So left shoulder, head, and then you got a right shoulder. You got to watch to see if that confirms or not. Good question, Jose. Let's look at Amazon from Alex. So this is a weekly chart. Let's start with that. I was carrying over from that resistance overhead, that's been significant. You look at it from the daily, it doesn't look as bad, but if you zoom out, you can still see that resistance there that I just mentioned on the weekly, heavy resistance there. So we had a bull flag breakout. This is where the market gets really frustrating, especially when it's because of wholesale selling. You get these nasty reversals. I mean, yesterday's action on Amazon, another like one of those Marabazu candles. I think that's the third way I've said it this time. I never say it right twice in a row for sure. But yeah, the highs of the day was 140.59 yesterday. It closed at 140.57. Really strong candle. You couldn't ask for a better breakout candle than what you got in Amazon. And then you get this 2% sell-off today, pretty much wiping the gains away. That's troublesome. You also have the resistance at 144. So I think for me, if I want to really improve my reward risk ratio on the trade, I need to see this thing come back down to about, let's say it takes a week or two to get back down to this level, probably like 132, like what you mentioned. Skyheart, you're late, man. It's okay, man. I forgive you. Let's see what else we got here. From Michael Anthony. It says, job, Goldwise Capital Group purchased the shares of G Group based on their belief that shares when purchased were undervalued. Yeah, I mean, you're getting more into the fundamentals of that chart there. We'll look at it, though, from a technical standpoint. I don't know if I even looked at this one before. One of the things to be mindful of, geez, this one, that's a penny stock, man. You're just asking for trouble on something like this thing. This thing will get you in trouble, man. Very difficult to manage the risk on one of these things. Left shoulder, head, right shoulder. Possible that it breaks out above 55. Again, I wouldn't touch anything that's trading below $1. I don't even like things trading below $10 that much. Tesla, yeah, we can do Tesla here. Let's look at it. So you have this long-term trend line here, this blue level. This is what confirmed. Let's just get rid of some of these lines while we're talking here too. All right. So with Tesla, this big, I don't know, bluish, purplish color here has been a huge level of support and resistance over the years. You can see where it was resistance back earlier this year in February when it got rejected. But this actually formed a major head and shoulders pattern. So left shoulder, head, and right shoulder. And that head and shoulders played out pretty good. Once it confirmed, went from 215 all the way down to like 100. That's like more than a 50% decline. Then you got this rising trend line on it here, and it's retesting the support level, sitting right on it at 233. Now, the next move is this. If this can't hold, if it breaks through it like it broke through it back in June, then you're looking at a retest of this 205 level. So it's kind of a sketchy scenario. 10% downside if that support level doesn't hold. To the upside, you could see a quick return back to the 290 level. So there is a bounce opportunity there. If it can hold, then yes, it could go back up to that 290 level. I'm definitely going to be watching that support going forward. I think it's a critical level. It's been a critical level for the better part of 2 years now. And the reason why I talked about the resistance on Tesla, because you got heavy resistance that goes all the way back to 2021. I wouldn't put a lot of faith in it breaking through that in the near term, but if you can get a bounce off of it, even if it goes up to like 250, it's still a pretty darn good move. PAGs, let's look at PAGs here. All right, we're upping it to $9 a share here. Man, there's not a lot going on here. Is the volume pretty low on this? No, it's 4 million or so. You want to be careful of is this here. Got a triangle pattern breaking down below it. You may have some support here at this 908 level. This is the lows from July. That's going to be roughly 898, I guess, is probably where I would draw the line there. If I'm in it and it breaks below that level, there's very little incentive for me to keep staying in it. The big thing about swing trading is trying to keep the losses small. Even if it bounces back or whatever, there's a lot of stocks that won't bounce back. And then you're starting to take 50, 60% losses, and it's just unacceptable and unsustainable from a successful, consistent swing trading career. All right, SPED. We can look at SPED too here. I don't even have SPED, which is oil, EF, HUD, and yeah. See, I don't have that either. We're getting some crazy stuff there. Michael Conley. Great analysis as always, Ryan. Love your candid, honest, realistic assessment of what the market is currently doing. Let me show you if it makes you guys feel a little bit better. Spotify, I got stopped out of this joker today, and it was annoying. This is where managing your stop losses is critical. Okay, so Spotify inverse head and shoulders pattern pulls back after that massive run. I'm looking to play the bounce here. You got this gap that's unfilled, looks pretty good. We take away today's price action. Let's just look at it from yesterday's point of view. You're seeing that, okay, pretty good. This line was something that I had drawn forever. I mean, you go back to February this year. That line has been there. You're seeing it get retested 3 days in a row. It holds that support level in the last 2 days. You get a good bounce. I'm liking it. I finished maybe like 0.2% higher on the trade because it was a late day fill. I slept good last night. I was like, this is probably going to be a good winner here. And then welcome to today. You know, despite the fact extremely oversold, we blow right through it. I got stopped out at 135.20. And yeah, it sucks. That's the part of trading that I hate. But it's part of it. Taking the stops, taking the losses, keeping them small. I lost 2.8% on that trade. It continued down, go even lower throughout the course of the day. I could have lost, upwards of about 4% on that trade had I not used it. And who knows how it would open up tomorrow. What are your thoughts on Oracle? This is one of the bright spots in the market today, that's for sure. Nice breakout, descending triangle pattern here. Somebody in the trade block asked me to mark this up for him, so I did today. Essentially, if the stock dropped below 111.13, that would be a good reason to get out. Ideally, after the first 30 minutes today, if you were playing this one, I didn't play it for the namely because you could have easily wound up with an NVIDIA as well, where you play it on that initial move higher, and then it spends the rest of the day fading because the rest of the market's fading. But at least in this situation, Oracle didn't do that. Oracle held it together really well against the odds. Strong volume here. You can see today volume pretty big, breaking out of this descending triangle pattern. It was very close just 2 days ago from breaking lower and making quite a moment for the stock to the downside. But really strong movement here. I think the next challenge is going to be breaking above 121, and then of course the previous highs at 127. Actually, I think that's all-time highs for it. Yeah. So taking out the all-time highs. Very bullish stock. I think you're going to probably see some more people attempt to try to play it again tomorrow as well. From Michael Connolly, hey, Ryan, when the market is in a chop like this, should swing traders stay on the sidelines? I notice you avoid over trading in these kinds of circumstances. Yes, I really do try to avoid over trading. I think I've made 4 trades this month. So that's it. I tried to do Spotify yesterday. Did not work out. But where a lot of traders will get into some bad situations is when they feel like, I got to make up for these losses. I got to try to pull it together. And you can't do that. You just got to let the market settle in. Reason why after I got out of Spotify, I didn't add a new position because the market never stopped selling. And so I want the market to be in alignment and the sectors to be in alignment with what I'm trying to trade. And if it's not, then I'm not going to trade it. All 11 sectors were down today. Financial services, basic materials, utilities, all down over 1.7%. Energy, 1.6%. Consumer cyclicals, 1.4%. In fact, the majority of your sectors actually outpaced the overall market. So that's why it felt so much worse. So yeah, when you're getting into this chart, especially over the last 5 days, it's not easy. You got to kind of stay on the sidelines unless there's a good trade setup that emerges that meets all the criteria. I tried to play PSQ a couple times last week, and one eventually I did hit it, but overall, even that with the low volume, it's been very difficult. XHB, let's look at this one. Yeah, a lot of questions about the home builders, and I think a lot of it's just because there's a lot of interest now with Warren Buffett. You know, I guess it came out that he had been buying like Lennar and what was the other? D.R. Horton. Built a horrible house. I'm not a fan of D.R. Horton, but you got a top pattern here. Could see where this thing could roll over here in the coming days. Let's see when you look at like D.R. Horton. It doesn't look like it's much of a topping pattern there, though. I could say about D.R. Horton, if it breaks like 122 level, that could create some more downside, but you do have a rising trend line underneath that it could find some support in. Going back to XHB, do we have anything like that? No. Let's see. Just trying to find where there might be some support. You have a rising trend line right there. That could be in play at around 73. But I don't think I'd be buying it right here unless we could get a break to the upside. Maybe it gets back above that little line right there. But again, it's very overextended from June onwards. I think a pullback could be in order there, especially if the interest rates keep going up. All right, my comments on Jen. Glad to help. Sorry that didn't work for you on Twitter there. Twitter, I never know what I'm going to get these days on that thing, man. Half the time I can't even get videos to load, but trend line off of, what is that, February highs of last year. That's been broken. That's been broken in the last couple of weeks. Here this month to the upside. Nice consolidation. You got essentially a ascending triangle pattern here, which it's holding together so far. Yeah, today it was down 1.25%, but if it can hold this bottom line and then it can break to the upside, then that's a good breakout trade setup there. Looks nice. Asking about Mitch Ray. I don't know who that guy is. Let's see. Pags, yeah, you can actually go back and look at it. I won't go back on it right now, but yeah, go back and look at the show here. I'm about to wrap it up any case. To Skyhart's point, all the sectors are pretty risky right now. There's none that's really showing much strength. Thank you, Jason, for watching. I'm glad that you were able to show up as well. Let's see. Thank you for what you do in your analysis when you swing trade. What other time frames besides daily do you view before entering into the trades? I'm going to be cognizant of like the 30-minute chart, right? You know, and then the 30-minute chart. Sometimes I'll pull up the weekly as well. Actually, I shouldn't say sometimes. I always do. I want to see if there's any major resistance levels that I'm missing out on. You know, we talked about Amazon, for instance, having that major resistance level. May not show up as well on the daily chart, but when you look at it from the weekly chart, it pops out to you. So that's one reason why I wasn't willing to play that bull flag pattern yesterday in Amazon. So in any case, good stuff from you guys here today. I was glad that you guys showed up, man. And hopefully we can get a little bit more love out of this market here in the coming days. It's been pretty brutal. But I think we'll get there. I think we will. And we just got to get some direction. If it's to the downside, if it's to the upside, we just have to be willing to react accordingly. So make sure to like and subscribe, guys. Thank you so much. Check out the podcast. Go to swingtradingthestockmarket.com if you want to get all my stock market research each and every day. I do tons of videos each day, providing watch lists and different analysis on the market and on the S&P 500 and all those other indices. So thank you, guys, and God bless.